It is time now for ETF Friday. One area of the ETF world that has not seen the type of growth that the rest of the industry has, alternative ETFs. They employ hedge fund strategies. Here to explain why Vanguard and AQR could change that is Eric Balchunas, senior ETF analyst at Bloomberg Intelligence. Now, when we talk about hedge funds, one of these things is not like the other. AQR certainly fits into that. Sure. Vanguard does not.
Yeah, no, but
now it does, I guess.
Kinda. So Vanguard is an odd choice for this, and they haven't filed anything, but I think this could be their next ETF. They have a mutual fund called the Vanguard Market Neutral Fund, and the reason this could be ETFized is because it's run by the same group, their quantitative group, which is internal, that just launched these 5 single-factor ETFs, including a momentum ETF and a multi-factor ETF. It's not that far of a step to go from momentum or multi-factor to market neutral. It's not a big leap as it was before.
And market neutral, what is long short?
Yes, long short, just trying to get low vol, eke out some performance, and that's what it does. It's up, I think, 6% over 3 years, but it's got real low vol, about a third of the market. It's got no correlation, exactly what you want from an alt, but it's dirt cheap. And that's one thing missing from the alt category is dirt cheapness. That's invaded all ETFs, but the average fee for an alternative ETF is 80 basis points. So Vanguard, this mutual fund, charges 20. So it would come in, a quarter lower than the average.
Yeah, Vanguard's playbook there. And what about AQR? It doesn't have one yet, but you think maybe there could be a launch.
Well, they filed for exemptive relief, which is the first step towards filing for actual ETFs. And they have a market neutral fund that is just amazing. And they would bring something that is missing too, sizzling performance. Their market neutral ETF is up 30% over the past 3 years. And that's with almost no volatility and no correlation. You can see the numbers there. That's mouth-watering for somebody looking for alternatives. So right now, the alternative ETF category is $2.7 billion. That is nothing, considering hedge funds have $3 trillion and liquid alt mutual funds have about $200 billion. What's missing is cheapness and really high octane performance, or really good performance. And if we have a market that's a little bumpy, alts could get popular. You could see that area explode. Yeah.